Well, hello everyone, and welcome to XPON's Q3 FY22 results webinar. My name is Jane Lowe, and I'll be your moderator for today. For those of you who are new to the XPON story, the company listed on the ASX in December 21, and it's a marketing, technology and cloud business. It's providing mission critical services and software solutions to enterprises in Australia, New Zealand, the UK and Europe. And XPON helps customers to better leverage their first party data by deploying the XPON marketing and tech stack, and by doing so help to unlock exponential growth that their customers can derive. The format for today is for Matt Foreman, who's the founder and group MD, to walk you through the Q3 results, which were released to the ASX earlier today. So you'll find that there's the quarterly cash flow report and covering note, as well as an investor presentation if you'd like to take a look at those, obviously on the xpon.ai website and at the ASX. The presentation should take around 15 to 20 minutes. And it will then be followed by a 10-minute question and answer session. Also on the call today, we have XPON CFO Leanne Wolski, who will be available to answer any financial questions. If you'd like to ask a question, a reminder you can do so using the Q&A function in the Zoom ribbon at the bottom of your screen. So with that, I'd now like to pass the floor over to Matt and Leanne, who'll get us on the road. Thank you.
Awesome. Thank you, Jane. And good morning, everyone. Can you see my screen loaded up there? It's shared now. Okay, yes. Great. Fantastic. So, yeah, very excited to share with you our Q3 results today. So, as Jane mentioned, there may be some people here that are new to the XPON story. So I thought I might just spend a couple of minutes just at the front to talk a little bit about who XPON is and what we do, and then we can jump into the results. So the core problem, or the sort of root cause of the problem that XPON solves, is actually a privacy problem. There's a lot of regulation happening all around the world, being very much driven by consumers' increased awareness and concern about how their information is being used online. A lot of that regulation, there's things like the GDPR in Europe and the Australian Privacy Act, and in the US there's things like the California Privacy Act. So all of that regulatory sort of pressure has sort of forced a lot of these big tech companies to start to posture towards a more privacy-centric way that they deal with their customers' data. And one of the key things that are changing there is this phasing out of what's called third-party cookies. And third-party cookies are the technology that internet websites and companies use to track what users do online. Have you ever been to Facebook, for example, and seen an ad for a pair of shoes and then clicked on that ad, and then those pair of shoes have followed you around the internet for the next 6 weeks? That's the sort of thing that third-party cookies have enabled. With that data going away, so that's being phased out now by all of the tech companies. Google still has it available. That will be phased out by the end of 2023. That means these big tech companies are having revenue issues. You may have seen some of the sort of feedback around Facebook's or Meta's announcements previously, where they attributed 10 billion in lost revenue to these changes just from Apple alone. It's also a big issue for our customers, which are corporate and enterprise customers that spend a lot of money on marketing and customer experience through digital channels. And so the solution to that is to use first-party data. And first-party data is data that a company owns about its customers and consumers. And the way that we enable that is through our customer data platform called Wondrous. So what Wondrous does, it enables our customers to take all these different sources of first-party data. So they could be things like information from their point of sale, their CRM, their e-commerce website, their loyalty systems. There's lots of different sources. Centralize that in one place, run a process of enrichment called identity resolution, which essentially joins up all these different sources of data to help create a single view of the customer. And once that single view of the customer is created, we're then able to use machine learning and AI to do some very powerful predictive analytics on it. And there's things like which customers have a propensity to churn, or which customers have a high propensity to purchase a product, for example. And then we can take that data in a very privacy compliant and anonymized way, synchronize that back out into the global internet platforms like Google and Facebook and LinkedIn and Bing and all the different platforms. So what that means is it helps these internet companies fill some of that data gap and help fill some of that revenue attrition. It helps our customers with their advertising to remain relevant and more effective. And this XPON essentially sits as this middleware in between our customers' most valuable and most under-leveraged asset, which is their customer data, and these big internet platforms that consumers are using to research and buy products and services. So that's really the core problem that we solve. The way that the business is structured, we essentially have two parts to it. There's XPON Technologies, which is our solutions business that works with customers in Australia, New Zealand, the UK and Europe to really help them take advantage of this technology. We're a partner with Google where we can resell some of their ad technology and bundle it with our own technology as well. And then we have our XPON Platforms business unit, which is where our proprietary technology lives. And that's our Wondrous customer data platform, which we're primarily focused on right now. And our second product is our Holoscribe XR product. And we see that as a Horizon 2 growth opportunity. It's very much targeted this next sort of version of the internet as the metaverse and Web3 starts to become much more accepted and real over the coming years. So just to talk to some of the results from the third quarter. So our annualized recurring revenue was 14.5 million. So that's up 183% year on year. So we added 1.4 million in annualized recurring revenue. That was based off winning 8 new customers and expanding 10 existing customers. Our revenue was up 133% to 3.4 million for the quarter. Our gross profit was up 145% to 2.2 million in the quarter. Accordingly, our margin has expanded as well to 66%. That's up 3 percentage points on the previous year. On a like-for-like basis, because we actually did an acquisition of a company called Interim back in June, if we factored that in, the gross margin is actually up 12 percentage points on a blended like-for-like basis as well. So we've had some really good expansion in our gross margin. We finished the quarter with 11.1 million cash in the bank. So we're very confident we're well capitalized and able to continue to execute on our growth strategy. And 90% of our revenue during the period was recurring revenue as well. So this just sort of gives you a bit of a visual of the ARR growth rates that we've had. You can see there that we have grown 58% year to date. So that's from June to the end of March and added 5.3 million to the total ARR during the year to date period so far. And then it comes to our unit economics. So we're very lucky that we don't churn very many customers. Our average monthly customer retention rate was 99.5%. That is slightly down by 0.1% on the previous quarter. That was attributed to the churn of one customer that didn't contribute much from a revenue perspective. I think it was less than $25,000. So a very marginal decrease on that. Our revenue retention rate is up to 140%. It was 131% in the previous quarter. So those 10 customers that we expanded during the quarter have very much contributed to the continued growth in our revenue retention. Our lifetime value per customer, which is a calculated metric based on the average revenue per customer and the duration that we retain that customer from, is down to 654K. And the reason that is down is because of that very slight reduction in our retention rate by 0.1%. The acquisition cost per acquisition was 36,000, which is very close. It was 35,000 last quarter. So that payback period from a CAC payback period is 7 months, which is consistent with last quarter. And our LTV to CAC ratio is 18, which is down from last quarter, which was 22, primarily because of the reduction in that calculated lifetime value number that I spoke to. And our total lifetime value is 130 million. And again, down just because of that 0.1% reduction in our customer revenue retention rate. We're very, very comfortable with these numbers. I think the key metrics that myself and the board are very focused on is our monthly retention rate. At 99.5%, it is very much best in class. And accordingly to that revenue retention rate, 140%, again, very much best in class from a revenue retention rate there as well. Just some key operating highlights during the quarter. So we continue to really focus on our people. That's a key strategic pillar for us, is scaling and engaging our team. We grew our headcount 18% to 116. Part of that was we added another 5 people to our sales and marketing team. 3 of those were BDMs that joined the business towards the end of the quarter. So, that investment that we've made this quarter will hopefully start to pay dividends now in the subsequent quarters as those BDMs start to build their pipeline and start to convert that pipeline through to sales. And those marketing team members now start to contribute to building pipeline and generating leads and lifting our brand awareness as well. One of the BDMs that we appointed was in New Zealand, so that's our first hire for New Zealand. So that'll be our first person on the ground. They've just started this week, so very excited about that. We think the New Zealand market is underserved for the solutions that we offer, and we think there's a good opportunity for us to win some good market share in that corporate and enterprise market there in New Zealand. One of the key pillars for us with our customers, which is why you see us having such a strong revenue retention rate and customer retention rate, is our net promoter score. Of the customers that we surveyed this quarter, our net promoter score was 84. It's a very strong result as well. And then in February as well, our Wondrous platform attained the ISO 27001 Global Information Security certification. So that bodes very well, particularly in markets like the UK and Europe, where security and privacy are very, very key elements to platforms like Wondrous, and being able to manage customer information and data very securely. Our land and expand strategy continues. Like I mentioned, we won 8 customers during the quarter and we expanded 10 for the year to date. That brings the total to 24 customers that we've landed and 23 that we've expanded. So we're seeing very consistent quarter-on-quarter outcomes there, and very much in line with our strategy and the expectations that we have for the business. So, for those of you that are new to the XPON story, our strategy very much is land a customer, solving one problem and providing one solution from our XPON stack, and then be able to incrementally deploy the different products from that XPON stack over time and expand that customer. And you see that manifest itself in our revenue retention rate, as that revenue retention rate continues to grow as we continue to expand our customers. On the team footprint, like I mentioned, we grew the team 18%, up to 116 in total for the quarter. So you can just sort of see geographically there how the team's positioned. We did increase our headcount in Hanoi with our engineering capability. That was the biggest growth in our headcount during the quarter. We're very, very pleased with that solution for our business and with the people and the team that we've got there. Obviously, all over the world, the competition for tech talent is pretty fierce. And what we're seeing in Hanoi is that the time to hire is dramatically shorter than here domestically in Australia. We're finding with very technical engineering roles, that time to hire can be as short as 2 to 3 weeks from when we put the job out to when we get an offer accepted. And in Australia, that time to hire can be 2 to 3 months. So that the ability for us to continue to scale our team cost effectively with really world-class talent is key for XPON in that Hanoi business. And as I mentioned as well, we put our first person on the ground in New Zealand, which have started this week. So excited to see the growth that brings to the business as well. So as far as our priorities and outlooks, and consistent with what we've spoken about previously and in our prospectus, there's 5 pillars to our growth. Strengthening our existing solutions, and that really is about building more capability and more strategic enablement for our customers. That may include acquisitions. We haven't identified any acquisitions that are imminent at the moment. We've certainly got an ear to the ground. If there is an opportunity to acquire something that might strategically fit, give us the ability to acquire some enterprise customers that we can expand into our XPON stack, potentially acquire some great technology and some great talent, and expand the margin and get some accretive sort of benefits from that, we would look at it, but there's nothing imminent at the moment. The second pillar there is really about expanding our value creation and the product adoption from our existing customers, and we're really pleased with how that's going. Our customers continue to trust our team explicitly, continuing to buy new products and new solutions from our stack. Expanding our sales and marketing capability. We've started to deploy some of those IPO use of funds now against that growth pillar. Expanding our channel relationships, and that's something we're working on very actively at the moment. And that's just not new channel partners. Like I mentioned, we've got a great relationship with Google. It's about expanding that partnership into other markets as well and driving that into our UK and Europe business a lot harder through that Google relationship. We've got a relationship with Facebook, and we're also looking at other partners there that we can expand those relationships with. And then finally, they're extending that Wondrous platform ecosystem. And that really is about integrating Wondrous into this global internet ecosystem. So that can be integrating into the tech platforms more deeply, or it could be providing APIs for our customers to enable them to integrate our technology and data capabilities more deeply into their internal ecosystems as well. So from an outlook perspective, I think the outlook still remains very positive, and the same. We're going to continue to invest in these additional sales and marketing capabilities and really accelerate our pipeline and the new customer wins that we're seeing. We're going to keep ramping the sales teams. That's an ongoing piece of work, excuse me, that we're focused on. Continue to focus on our product and customer mix to keep that gross margin growing. Like I mentioned, we closed the quarter at 66% gross margin there. We think there's still room for that margin to continue to grow and increase as we continue to drive more efficiencies. We continue to generate more of our revenue from usage fees and software licenses. We expect that gross margin will continue to expand, and we are very focused on margin expansion, and all my senior executive team's incentivized around that as well. Continue to grow that revenue retention and keep validating that land and expand approach that we have, and continue to build out that product product roadmap with Wondrous and keep integrating it into the broader internet ecosystem. And finally, our people, continuing to make sure that we're attracting really great talent. We're engaging and retaining that great talent, and we're giving them a place where they can do the best work of their lives. So that's the focus, the outlook. We remain very positive. As I said, we're well capitalized. We've still got over $11 million in the bank, and we feel the future is very bright. And that is it for the formal presentation.
Excellent. Well, thank you, Matt. With that, if you're ready, we might open up the floor to questions. Give you a chance to have a sip of your water. We'll ask you to stop the screen share in a minute. So let's thank you to everybody that has already submitted a question. Just a reminder, if you'd like to do that, do so using the Q&A function in the ribbon at the bottom of your screen. We'll kick off with this one. So what has caused the uptick in gross margin? And you did just touch on this at the end, but is this sustainable, and is there further upside from here?
Yeah, so the uptick in the margin, I think there's three drivers for that. There's efficiencies, and our ability to drive efficiencies through our team in Hanoi in Vietnam at a much lower cost base is a good contributor to margin expansion. There's a contribution of revenue mix, and there are two elements of that are the usage fees that we generate from the resale of the Google products, where we get a clip of the ticket of the media and the cloud consumption, and software licenses. So as we sell more software licenses at a higher margin and they contribute more to the revenue mix, the margin continues to expand. As that continues, we're very confident that we feel that we can be on par with other SaaS comparables as far as gross margin goes over time.
Thank you. Okay, so sort of related question. How do I think about the capacity constraints of Wondrous, and when does it get to a level where further investment is needed?
The capacity constraints of Wondrous, really the capacity constraints of the product, there isn't many. Like it's a serious enterprise scale data platform. We can handle petabytes of data through it. Really the capacity constraints around growth very much are sales and marketing and distribution, like how fast we can get the brand in front of potential buyers, and how fast we can get our SaaS people to talk to those buyers and convert those buyers. It is an enterprise sales cycle because we're selling something there's a lot of security and governance that's built into that platform. So there's a procurement process that we need to go through, particularly in industries like financial services, where there is a lot of regulation around how that information on their customers can be stored and where it needs to be stored. So we need to follow that process. We're very much learning as we go around how we can optimize that process to shorten it. So for me, I think the constraint around Wondrous growth is not so much capacity constraints around the product. It's more about speed constraints around how fast we can win market share.
Okay, great. So since we're, separate question actually. How has XPON been positioning for the metaverse?
Yeah, we think it's still very early days. Like I mentioned very briefly, this was a short presentation, so I didn't deep dive into the whole Scribe product. But we took a position very early, before it was even called the metaverse, before Mark Zuckerberg changed the name of Facebook, around extended reality. we definitely think that that is the second horizon of growth. Like, we have a number of customers that are using that platform at the moment. I think I've spoken previously, and one of our customers in the UK is Honda. They use it for virtual showrooming. They've seen fantastic results from that. I think we either have just gone live or about to go live with one of the major AFL clubs here in Australia as well. So they're using it for fan engagement. So there's lots and lots of different use cases in this early days of the metaverse. I think what we see is there's still barriers for consumers to use it, which is predominantly hardware barriers. I'm talking about headsets here. So as those barriers to entry reduce, as the cost comes down and as the form factor improves, we're definitely going to see that metaverse take off faster and faster. And we feel we're really well positioned for that. We've been in the game very early and had plenty of chances to learn and position ourselves and our product. And we have a very strong differentiation with our product, with our Holoscribe product, because it is linked and it's natively integrated with our Wondrous data platform. So we can take a very data-driven approach to user experience inside these metaverse experiences. And that is very well differentiated. There's no real other products out there at the moment that offer that type of sophisticated capability. So we're feeling excited about that as Horizon 2 growth, but it's not a today thing, it's more a tomorrow thing.
Thank you. Okay. So a few questions here that relate to cash burn, cash flow positive, profitability. So I'll try to wrap them all up into one. Can you please ask Matt on his view of cash burn, when he thinks the business might be cash flow positive, stroke, what the path looks like to profitability?
Yep. So cash burn, I think in the fourth there, it was just shy of 1.6 million in cash burn. We think that's going to stabilise for the short term around 1.5 to 2 million in cash burn. So we're quite confident we've still got plenty of runway to continue to invest in growth. We did raise money from the IPO to grow. So we definitely want to continue to execute on that growth strategy. We think the market opportunity is immense, and it'd be irresponsible to leave that opportunity on the table right now when there's just so much there for the taking. So we are going to continue to invest in that growth and continue to sort of stick to that strategy. We don't think that we will need to go back to the market to raise additional capital certainly in the foreseeable future. And we would hope that the cash that we've got from a runway perspective should start to get us close to that cash break-even point in the future.
Thank you. Okay, I've got some questions here around kind of segment mix and product mix. So what percentage of your sales growth is being driven by XPON developed products versus third-party reselling, which sits in your stack?
Yeah, we're not segmenting out the different revenue lines at the moment. The way we're segmenting is software, managed services, and usage fees. So I can't really answer that question directly. But we're seeing great growth across all of it, is the short answer. Yeah.
Okay, thank you. How do you feel about the price point of your services and products and elasticity to price increases?
Yeah, it's a good question. Obviously, in an inflationary environment, we've got to consider it. And if you have a look at our input costs, the major input cost is people. And, there's obviously a lot of upward pressure on wages, particularly in our industry as well. We don't try and position our product based on a price point. We position it on value. So we feel that, as customers continue to extract value from it, then they'll continue to pay for it. We haven't had any customers push back on our pricing. Like, if anything, my strategy is as much as you can is the pricing strategy. And certainly we're seeing our margin continue to expand as well. So, yes, there's input cost pressures from wage increases that we'll need to look at how we continue to keep our margin the way it is. But outside of that, I think we provide a very valuable outcome for customers, and it's value-based pricing.
And perhaps you've just answered this question, but I'll put it to you in a slightly different way. So what is driving the higher customer acquisition, the CAC ratio? And is a level of 35,000 plus the new norm?
We think that will go up. Like, if you have a look at the payback period, it's 7 months still. Sort of SaaS benchmark is 12 months. So we think we've still got plenty of headroom to continue to grow. I think there's two factors that I look at there. One of them is obviously we're investing ahead of the curve with our salespeople and our marketing people and our marketing expenses because it is an enterprise sales cycle. So there is a lag between when you invest and when they convert. So we'll see that CAC go up a little bit. And secondly, it's also a question of volume, because you can turn your CAC down and lower the price that you pay for a customer, but you end up getting less customers. So because we're trying to grow market share and grow quickly, we feel comfortable that if that CAC goes up in the short to medium term because of those factors, that we're still well within the range from a profitability at a customer level perspective, because that ratio, excuse me, between what it costs us to acquire a customer and what they're worth to us is so high.
Thanks. Okay, a few questions here around Vietnam. So you talked about hiring going faster and more economically in Vietnam. Are you still hiring and growing headcount elsewhere? That's sort of question one. And then the other is, do you intend to further grow the offshore development centre in Vietnam? And would you look at another location?
Yeah, good question. So yes, to the first question, we are hiring in other locations, but those roles that we're hiring for are customer-facing roles. So they're either sales, marketing people, or senior-facing technical people. So, because there's a fairly heavy technical component to what we do need to have like those technical pre-sales capabilities on the ground where the customers are. So we do hire those roles in here or in the UK and Europe. The second part of the question was, are we continuing to grow that and will we look at other regions? Yes, we're going to continue to grow it. Will we look at other regions? At this stage, we do have team members all over the world, and they work remotely. As far as setting up like a dedicated team, similar to how we have in Vietnam at this stage, that's not a part of our strategy at this stage.
Okay, thank you. How much of the business development team is focused on new client acquisition versus existing client upsell?
Yeah, nearly all of them are customer acquisition focused. The current model that we have is the BDMs are essentially what we call hunters. So their role is to go out and find new customers and land customers. They stay close to those customers, but those customers then move into a customer success team. And that customer success team has a growth number attached to it as far as helping to expand those customers. And the BDMs will dip in and out of those customer success opportunities as required to help expand the customers as needed, but they're primarily focused on net new.
Great. I'm conscious we're getting fairly close to time. We do still have a number of questions in this list. If we don't manage to get to your question today, please feel free to follow up with Investor Relations directly, and we'll respond to you that way. We might just take an extra couple now. So, Matt, some cheeky questions in this list, of course. That one here on Outlook. So, how does the pipeline look and outlook into Q4?
We're confident. I think our pipeline is strong. We've consistently been delivering quarter on quarter, and we don't see a reason that we wouldn't consistently continue to deliver into Q4.
Thank you. Has the business grown strongly across both Australia and the UK?
Yeah, the Australian market has been growing faster than the UK, and just those 8 new customers that we won last quarter, 25% was in the UK, 75% was in Australia. Having said that, though, there is a lot more BDMs on the ground here than there is in the UK, and we're hiring more in the UK at the moment. So we would expect that because we've got a higher weighting to sales capacity here in Australia.
Thank you. Okay, we might just make this the last one, and then I'll hand back to you for closing comments. So, does AI have any role in your services or back office processes?
As in artificial intelligence? Absolutely. Yeah, absolutely. So there's a number of AI models within the Wondrous platform that helps to do some very, very sophisticated sort of prediction modeling around customer data. So that is core to the platform. In the back office, yes, there's certainly a lot of work that we're doing in the background around process mapping and process automation that will then, once that process automation's in place, we'll then use AI to help sort of guide a lot of that. So yeah, AI is definitely central to one of the core technologies that we look at both internally and externally.
Okay, terrific. I'd like to thank everybody for their very thoughtful questions. We do still have a few in the list. Again, feel free to reach out to us via the investor email address, and we can follow up with you that way. At this point, I might hand back to you, Matt and Leanne, for any closing comments.
Yeah, no, thank you, Jane, and thank you everyone for joining. We really appreciate the support from our investors, and No, we're just getting started. So yeah, it's going to be an exciting ride. So thank you very much for your support and your interest.
Excellent. Okay, well, with that, well, again, thank you to everyone. I invite you to disconnect and we look forward to keeping you across XPON's progress. Thank you.
Thank you.